Pfizer, on a Wednesday, projected their sales for 2024, which were as much as $5 billion below Wall Street expectations. This forecast was primarily due to the dwindling demand for COVID-19 vaccines and treatment, which led to a 7% decrease in shares during pre-market trading. The day preceding these lower forecasts, Pfizer announced a reorganization of its cancer division to incorporate the acquisition of Seagen. In addition, the drug maker also increased its cost-cut target by $500 million on that same Wednesday. Already experiencing a decline of over 44% so far in this year, Pfizer's shares took another hit, dropping 7% in pre-market trading. This drop in shares could potentially wipe out over $10 billion in market capitalization if these losses persist during regular trading. Pfizer has been under tremendous pressure due to a sharp fall in sales of its COVID-19 vaccine and its antiviral pill, Paxlovid. These products, which had brought in over $100 billion in revenue the previous year, are now expected to generate a total of $8 billion in sales in 2024. This is a sharp contrast to analysts' expectations, who predicted sales of Comirnaty alone to be over $8 billion, and another $5 billion from Paxlovid. This forecast represents a more conservative outlook for Pfizer's COVID-19 franchise after it had been overly aggressive with its 2023 outlook. The COVID-19 sales targets likely represent a floor for 2024 sales, as stated by JP Morgan analyst Chris Schott. This drop in COVID-19 product sales has also compelled Pfizer to initiate a program to cut jobs and expenses, which is now expected to save at least $4 billion a year. Pfizer's $43 billion deal for cancer drug maker Seagen, which is expected to close on Thursday, is anticipated to add $3.1 billion to revenue next year. The US drug maker expects annual revenue in the range of $58.5 billion to $61.5 billion. This is in comparison with analysts' average estimate of $63.17 billion, according to LSEG data. The company has also forecasted an adjusted profit in the range of $2.05 to $2.25 per share, which is lower than analysts' expectation of $3.16. To summarize, Pfizer's 2024 sales forecast has fallen short of Wall Street expectations due to a decrease in demand for COVID-19 vaccines and treatment. This, in turn, has led to a decline in shares and a potential loss in market capitalization. The company is also undergoing a reorganization of its cancer division to include the acquisition of Seagen and has increased its cost-cut target. Despite these challenges, Pfizer is taking measures to cut jobs and expenses, which could lead to substantial savings in the coming years.